Good morning and thanks for tuning in. This is Stocks to Watch on BloombergQuint and I'm Mathew. First of all, sorry for the bit of a delay we've had in starting this program today, but let's get started now. It's not very often that we have this clear an idea of what the stock of the day is going to be. We have that today. But first, let me get in my guest for the day. We've got Mayuresh Joshi, who is head of equity research at William O'Neill, who's joining us this morning. Thanks so much for joining me, Mayuresh, and good morning. Good morning to you. The stock I was talking about earlier is clearly GMM Pfaudler, Mayuresh, and it was in focus a short while back when it said that it was going to take over its parent. Now the promoters want to sell stake worth up to 1,433 crore rupees through an offer for sale. The floor price, interestingly, is set at a 33% discount to the market price at 3,500 rupees a share. But we must remember that this is a stock that has more than tripled over the past 12 months. What's your advice to investors who are considering adding more? And is the OFS a good option to do so?
Morning, Alex. Thanks for having me on your show in the first place. In the first place, you're absolutely right. I think the kind of appreciation that the stock had exhibited over the past few quarters and years was exemplary. And it was based on the model that they were probably running. I think the structural story related to GMM Pfaudler in terms of providing glass-lined equipment to pharma industries, I think that was very well taken. Even the non-lined glass equipment segment was having a very, very good offtake. And the kind of enhancements that they've done, for example, the gas furnaces, a couple of them still expected to come through. I think that probably propped up the kind of earnings growth and the corresponding valuations that the stock kept on receiving. On the other hand, I think the announcements that happened a few weeks back in terms of the consolidation of the global entities as well, and it itself being a holding company and the new OFS offer which has come through, at the price, considering the current market price and the discount that we are probably giving off. Valuations do come off a tad bit, but what probably happens to the overall structure in the larger scheme of things has to be understood. So whether it's that entire holding company discount, which the entity will get in respect of Indian and global operations as well, and how are the global queues panned out at this point of time, specifically the volatility that we are seeing, second wave of infections expected to come through, huge amount of upheaval for global as well as domestic markets at this point of time. So I think there is a lot happening right now. Valuations might get readjusted as all these things start taking place, but you also need to account for an holding company discount for the overall part of the business. So I'll wait and watch, Alex. I think no need to rush and hurry into the stock. So our methodology probably suggests, I think, just wait out and wait for some price action to start improving numbers, which will be a testimony to their overall growth in fundamentals, which remains solid so far, but let's wait it out.
Interesting that you say that, and that's the current context that we're in, right? Mayuresh, we've seen a big correction yesterday, and suddenly the mood has gone just a tad bit cautious. But speaking about one of the sectors that was at the center of that selling maelstrom yesterday, that's the banking sector. And the Bank Nifty, of course, ended lower by 3% yesterday. Then there was that update from SBI and the guidelines for the loan restructuring program that came in. One, that they're saying that they're going to take personal guarantees from promoters or in fact pledge shares to cover restructuring. And for the retail side, there's going to be the process of scrutiny. And beyond that, individuals, once they qualify, will have to pay 0.35% higher than the rate that will apply for the remainder of the loan period. Your quick comments on that plan, and considering that we might, in fact, like you said, be entering a phase of consolidation, at least for the near term, how would you play the banking theme? Are you looking at a particular number of names that you would lap up or pick up if there is a significant correction?
No, so I think it's an approach which mandates the risk management practices at the bank end. So when they're trying to restructure either a corporate loan or a personal loan, whether it's housing loan, a personal loan, education loan, they do want to safeguard whether you're eligible for the loan itself. And when you are, I think there is an added layer or a filter put to that. So I think there are no two ways about it. I think it's a safeguard mechanism in terms of sound risk management practices. Now, how the disbursements will happen, how long will that process take? I think that's something which I think the bank processes might be able to answer in the next few weeks and months. But yes, you're absolutely right. I think looking at the overall context, a hearing coming up on September 28th in terms of the moratoriums and the interest on interest case, what is happening in terms of a lot of allegations that are now being put out in terms of a lot of global bankers for past transactions and the volatility implied thereof in global markets. I think the cautious stance on the banking sector, stroke financial sector, probably continues at this point of time. Disbursements have been very, very selective. Deposit growth has been reasonably strong. And what probably happens in terms of the overall dynamics in terms of asset quality, provisioning, so on and so forth. I think that has probably been a safeguard mechanism, but it will still take time, in my opinion, for the banking sector to start probably showing and reflecting consistent and better numbers, assuming all these factors at play that we've got. So financials, I think, again, we'll wait and watch. Let's see how the next quarter's numbers come up, how Q2 numbers stack up and what the commentaries are, and then probably take a call. But stacking up, I think the focus should largely be on larger private sector banks, where I think the disclosures have been relatively better so far. Nothing against the state banks, but again, I think the asset quality pressures still continue to be a little bit of a weak link there. But we'll wait it out, as I said. I think let the numbers come out and then we'll.
Interesting. So watch out for the big names in the banking space on the private side is what Mayuresh is pointing out. But Mayuresh, a sector that was a little bit more battered than the banking space, in fact, was the metals space. And of course, there was news-based action with regard to JSPL, where certain transactions that were called suspicious, that were highlighted, perhaps the stock reacted on account of that. But also there's the global theme that is being talked about in terms of perhaps there's another second wave. Perhaps there's going to be a major slowdown, and base metals, I think, took a hit because of that. What is your view of the metal space? And in fact, of these allegations, JSPL, of course, came out and clarified, saying that these transactions were legitimate. They had proper underlying assets, but the entire space saw a correction yesterday, and a big correction. So how do you play that?
No, so absolutely no two ways about it, right, Alex? So if there is a global upheaval which is expected, if cases, as you're pointing out and as we are witnessing right now, are on the rise, there is always these doubts that come through whether there's going to be partial lockdown, complete lockdowns in a lot of economies across the globe. And that does not help or aid and abet the metal sector as a whole, because the entire dynamics of this sector is based on demand supply. So if the demand is expected to contract for any of these reasons or all of these reasons combined together, I think even if supply is probably there, the supply contraction also becomes very, very obvious to meet up with the demand. And that probably causes the price realizations to start coming down. Input costs, because of lower demand, will also start coming down. But I think the entire leverage that gets paid for metal companies is because of increased volumes and increased realizations. I think if they start remaining flattish or in the negative terrain because of all these factors combined together, and with the kind of leverage that they have onto their books, I think the cash flow becomes a huge, huge issue. And consciously so, I think then the companies start cutting down on the other elements of their costs. So I think the capex then goes for a toss because demand is expected to be low and so on and so forth. So yeah, I think the metal sector or the commodity sector overall, the super cycle begins in times of good demand expected to come back. And that probably seems to be missing at this point.
Absolutely. And the tone that I'm getting, Mayuresh, from all three conversations is kind of a cautious wait and watch. Let's see how it plays out, if I'm not mistaken, right?
Yes. So we being growth investors at O'Neill, I think my entire thesis or our entire thesis will be, I think, let it settle down a little bit, right? I mean, the stock markets are going to be open, we are going to be open, the economy is going to move. So I think if you're cautious
there's
for
no
a few
rush.
days or weeks, I think there's no rush. You'll get better opportunities.
Absolutely. Thanks so much for joining me today, Mayuresh. Let's see how it plays out today. And indeed, dear viewers, do stay tuned over the course of today, and we'll have a lot more on the markets to bring you. Thanks so much for watching. This is BloombergQuint.